As you've been discussing, September, starting with volatility, we're looking at ways to spread risk through ETFs. I'm Leslie Picker, in for Dominic Chu. Joining me now is Bryant Van Cronkite, Senior Portfolio Manager at Allspring Global Investments. Brian, thank you for being here. Let's just go ahead and set the macro stage. You are not convinced the Fed is a lock to cut rates this month.
Yeah, that's correct. The Fed has 90% probabilities that they're going to cut this month, and they probably do. That is the base case. But there is a reason to be concerned that inflation still is above their desired target. Employment is clearly weakening, and a forward-looking Fed probably would cut rates here. But a backward-looking Fed, a data-dependent Fed, probably still could lean on the higher inflation rates and say, look, we don't have the deflation of the AI trend yet to support our price stability, and so we can't go too far. So it's not a lock, but I do think the base case is they cut and then pause from here.
So do you think they should be cutting then, given some of those potentially lagging AI deflationary pressures? Or do you think that they should be on hold, given all the uncertainty that's out there?
I mean, the reality as an investor is what I think they should do is less important than what they're probably going to do. And right now, I think they're going to probably cut. And as a result, as an investor, I need to think about what that does for the markets overall. It probably reaccelerates some of the investments in areas like housing. It probably creates additional return on invested capital through CapEx. And so it's a very offensive signal. And what I think they should do is less relevant to what they actually are going to do, which is probably cut rates.
Yeah, don't fight the Fed, as they say. So building on that idea of AI deflationary pressures, which sectors do you believe will be the biggest beneficiaries of this wider AI build-out now ramping up?
Well, in the large cap space, there's been some very clear early winners, a very narrow set of companies, which we all know, and they probably continue to do okay. But investors probably should begin to look to diversify into other categories of additional or second effect AI winners. And I see a lot of that happening in the industrials and materials space. If we're going to build out this AI infrastructure and more companies are going to utilize it, we're going to be able to layer in the nearshoring and onshoring effects of the recent policy movement. And that's going to create a CapEx cycle that benefits the industrials and materials sector specifically. So we want to begin to move capital from tech into industrials, into materials, and let that now be the next leg of our AI winner trade.
Yeah, about the full supply chain there. Thank you so much, Bryant. We're going to continue the conversation over at etfedge.cnbc.com. Bryant will be joined by Todd Sohn, technical strategist at Strategas Securities. I'll send it back over to you, Scott.